Welcome back, everyone. Ready for another deep dive?
Absolutely. Always excited to dig into a new company.
Well, today, we're turning up the heat with Haidilao International Holding Ltd.
Those amazing hot pot restaurants. I've heard great things about their dining experience.
You and everyone else. They're listed on the Hong Kong Stock Exchange, stock code 9658, in case anyone wants to look them up.
So they're taking the hot pot experience global. That's ambitious.
They are bringing those spicy communal vibes to the international stage. We're going to explore how they're tailoring those flavors and that experience to all those different markets.
I'm definitely intrigued. Where are we getting all this insider info?
Straight from the source, their 2023 annual report. It's packed with details on their business segments, their impressive growth strategies, and their plans to keep shareholders happy. You know, all the good stuff.
Perfect. Let's dive in. What's the big picture with this company?
So, Haidilao International Holding Ltd. basically runs those wildly popular Haidilao hot pot restaurants, primarily in the international market.
Okay, hot pot international market. Got it. But it's more than just food, right?
You got it. They're all about creating this whole unique and enjoyable dining experience. It's not just a meal, it's an event.
Yeah, that's what I've heard. Hot pot is all about sharing and socializing, a very communal experience.
Exactly. And while most of their revenue comes from those bustling restaurants,
Well, they also have a takeaway business.
y-
Interesting.
yeah, which could be a smart move for the future. You know, consumer preferences are always changing.
For sure. So, how are they managing to expand so rapidly while maintaining that unique Haidilao experience? They already have a huge presence.
It is impressive. As of December 2023, they had 115 restaurants across 12 countries.
Wow. 115 restaurants in 12 countries. Talk
Right.
about a logistical challenge.
Right. Imagine trying to maintain the same quality and experience across all those locations.
I can't even imagine. How do they do it?
That's where their multi-tier management system comes in.
Multi-tier management sounds complicated.
Not really. Think of it like a well-oiled machine. Headquarters sets the standards, but then local managers have the freedom to adapt to their specific market.
Okay, so it's like a balance between control and flexibility.
Exactly. Headquarters focuses on the big picture stuff.
Hmm.
Food safety, procurement, ensuring that consistency across the board.
Mm-hmm.
And then you have these senior regional managers.
I see. So they act like a bridge between headquarters and the individual restaurants.
Yeah. They're the ones keeping an eye on those local market trends and making sure the restaurants are meeting those specific needs.
It sounds like a delicate balancing act.
It is. It's about striking that balance between headquarters control and local flavor.
And it seems to be working for them. Their growth is a testament to that.
Definitely. And speaking of things they seem to be doing right, they really prioritize both customer satisfaction and employee effort.
Yes, their annual report really emphasizes those two elements.
It's not just lip service either. They're always improving services and products, making sure they resonate with local tastes.
And investing heavily in their employees.
Exactly. You can tell they understand that happy employees make for happy customers.
That's so important. It's all about fostering that positive work environment.
And they're not just focusing on the in-person experience either. They're also really tech-savvy.
Oh, right. They're actively developing their membership system and online operations.
Yep. By the end of 2023, they had over 4.3 million members and were active on social media in all 12 countries where they operate.
4.3 million members. That's incredible. They're building a global community.
And a powerful brand, too.
All right, this all sounds amazing, but how is this translating into financial performance? Are they making money?
Let's talk numbers. Their 2023 revenue was a sizzling U.S. $686.4 million.
Hold on, US $686.4 million. That's a lot of hot pot.
It is. That's a 23% jump from the previous year.
Seriously, a 23% increase. That's impressive, especially given how challenging the industry has been lately.
Exactly. So the big question is, what's driving this success?
Well, it's mostly coming from their restaurant operations, bringing in a whopping US $661.2 million.
U.S. $661.2 million. It's clear those hot pots are in high demand.
No kidding. And that's a 21.2% jump from 2022. That's amazing.
So what's behind this impressive growth? Is it just the hot pot craze?
It's more than that. A few things are playing a role here. The international service industry is bouncing back after some tough times. And Haidilao has made smart moves to improve restaurant performance, increase those table turnover rates, attract more customers, and expand their reach.
So they're riding a rising tide, but also strategically navigating it.
Exactly. And they're also committed to prudent financial management, making sure they have enough cash on hand to keep things running smoothly.
Okay, so they're financially savvy, which is always good to hear.
Mm,
But let's break down those revenue streams a bit further. We know restaurants are the main event, but what about those other sources of income?
you're right. We should take a look at the breakdown. They also have their takeaway business, right?
Right. And then a few other miscellaneous sources, all growing, but still pretty small compared to the restaurant revenue.
It makes sense. So what about expenses? The report mentioned other expenses increasing.
It did, by 13% in 2023. Anything noteworthy there?
Yeah, it's always good to keep an eye on expenses. Looks like the main culprits were those outsourcing service fees, which makes sense with all that expansion and the higher table turnover. And then those pesky bank charges, mostly credit card transaction fees. The joys of running a global business.
Ah, the unavoidable costs of success. Okay, so we've got the overall picture, but let's get a little more granular. 115 restaurants spread across Asia, North America, Europe, and Oceania. Are they seeing consistent success across all those regions?
That's a great question. It would be really interesting to see how those cultural nuances and preferences play out.
Right. What flies in one market might not in another.
Exactly. For instance, their table turnover rate in North America was 3.7 times per day in 2023.
3.7 times? That's a lot of hot pot. People must really love it there.
They do, and it's up from 3.1 in 2022, so it's getting even more popular.
Wow, that's quite a jump. What about other regions? Any interesting trends there?
Well, if we look at overall guest visits, Southeast Asia wins with a whopping 18.8 million in 2023.
Southeast Asia, the hot pot champions.
It seems that way. But in terms of table turnover rate, the others category, which includes Australia, the UK, and the UAE, leads with 3.8 times per day.
Fascinating how those cultural nuances show up in the data.
Okay.
So they're clearly doing something right across the board, but are they sharing that success with their investors?
The all-important question of shareholder value. Let's dive into that next.
All right, let's talk shareholder value. Are they planning to share some of that impressive revenue growth with their investors?
Well, their main focus is stability and growth, safeguarding those normal operations, making sure their debt and equity levels are in a good place, basically trying to hit that sweet spot of sustainable growth and keeping those investors happy.
Makes sense. Long-term vision, right.
Exactly.
But no dividends for 2023, huh?
Right. Holding on to that cash for now.
Might disappoint some investors looking for those immediate returns.
It might. But remember, they're actively hunting for strategic investment opportunities, things that could really boost their growth down the line.
Okay, so prioritizing long-term growth over those short-term payouts.
Exactly.
No dividends, but what about share buybacks? Could those be on the table?
Their annual report doesn't specifically mention share buybacks.
Interesting.
But it's definitely a possibility. If they think their shares are undervalued, they could repurchase them.
Okay, yeah. Reduce the number of outstanding shares, potentially boost those earnings per share.
Right. It's a strategy we'll have to keep an eye on.
For sure. Now, one thing that really stands out in their annual report is their commitment to employee well-being. You don't see that emphasized too often.
It's true. It's not your typical annual report highlight, but they seem to have a genuine focus on creating that positive and supportive work environment. Could be a key differentiator for them.
Totally. Their report mentions quite a few initiatives aimed at employee development and welfare.
Yeah. They talk about building those harmonious labor relations, providing fair promotion channels, offering a comprehensive range of benefits.
They even have this Golden Eagle pool for their top performers.
The Golden Eagle Pool.
Yeah. Employees who get special training and access to those fast-tracked promotion opportunities.
Wow. Sounds pretty intense.
It does. But it shows how much they value recognizing and rewarding talent.
Absolutely. That can go a long way in building loyalty and boosting morale.
Definitely. And it goes beyond just promotions. They also highlight their zero-tolerance policy for forced labor and child labor.
Yeah, that's huge, especially when you're operating in so many different countries with all those varying labor laws.
It's reassuring to see. Shows that they're not just paying lip service to ethical labor practices, but actually incorporating them into those global operations.
For sure.
They even go as far as creating localized employee handbooks, outlining things like salary, benefits, working hours, overtime policies, all very detailed and tailored to each location.
Wow, that's impressive. They're really committed to creating a consistent and positive experience for their employees, no matter where they are in the world.
It's great to see. But does all this focus on employee well-being actually translate into results?
That's the million-dollar question. Their report doesn't provide specific data linking those two things, employee satisfaction and financial performance.
Right.
But there's a ton of research out there that suggests a strong correlation.
So it's not just about being nice to employees. It could actually be a really smart business strategy.
Exactly. Think about it. Happy employees are more productive, more engaged, more likely to stick around.
Makes sense.
That can lead to lower turnover costs, better customer service, and ultimately a stronger bottom line. It's something other companies might want to take note of. Definitely. All right, let's shift gears and delve into some more of those financial details. We already touched on their revenue growth, but what about those key metrics from their income statement, balance sheet, and cash flow statement? Give us the numbers.
Right. Let's start with profitability. Their income statement shows a really solid gross profit margin, hovering around 70% in both 2022 and 2023.
70%. That's pretty healthy. What about their operating expenses? Are those under control?
Well, their operating expenses as a percentage of revenue have actually decreased slightly from 2022 to 2023.
So they're becoming more efficient.
Exactly. Always a good sign for investors.
Okay, good news so far. What about their balance sheet? How's their overall financial health?
The balance sheet looks strong. They've got a healthy cash position, which we already touched on, and a pretty low debt-to-equity ratio.
Yeah, they're not over-leveraged. Gives them more flexibility for future growth.
Exactly. That financial prudence is key. It means they can pursue expansion, invest in new technologies, even look at potential acquisitions without being weighed down by all that debt.
Smart move. Now let's talk about cash flow, the lifeblood of any business.
Absolutely. And their cash flow statement shows that they have strong operating cash flow.
So they're generating plenty of cash from their core business operations.
Right. Which is a really good indicator of their ability to sustain growth and cover all those expenses.
What about free cash flow? The cash they have left over after investing back into the business.
Well, they have positive free cash flow, which is always a good sign.
Positive free cash flow. That means they have options, right?
Lots of options. They could pay dividends if they decide to do that in the future, buy back shares, reduce debt, or reinvest in those promising growth opportunities.
Okay, so even though they're not paying dividends right now, they're in a strong position to do so in the future. That's good to know. But let's be realistic. Every business faces challenges, and operating globally comes with its own set of hurdles.
You're absolutely right. It's not all smooth sailing. They've actually outlined some key risks in their annual report.
Oh, that's smart. Always good to acknowledge those potential bumps in the road.
For sure. And it's important for us to understand how those risks could impact their future performance.
Okay, I'm all ears. What are some of the key challenges they've identified? Okay, I'm all ears.
Yeah.
What are some of the key challenges they've identified?
One major concern is the competitive landscape. The international catering service industry. It's a tough world out there, especially in the restaurant business.
Oh, yeah. Cutthroat for sure.
And Haidilao is facing pressure from all sides, both those established players and new entrants trying to get a piece of the pie.
So how are they going to stay ahead of the game? What's their strategy for maintaining that competitive edge?
Well, they're really doubling down on those two pillars we talked about. Customer satisfaction and employee effort.
Makes sense. Focus on what you do best, right?
Exactly. They believe that by providing that unique and enjoyable dining experience, backed by a super dedicated and well-trained staff, they can set themselves apart.
It's about creating that special Haidilao experience that keeps people coming back for more.
Right. And they're not afraid to embrace technology either.
Oh, yeah. They mentioned using technology to enhance those operations and customer experience.
Yep. Which is so important in today's digital world. They've implemented online ordering systems, developed the sophisticated customer relationship management system, and are even experimenting with robotics in some of their restaurants.
Hold on, robotics. Like robots serving hotpot.
Well, not exactly replacing their staff, but think of it as complementing them.
Okay, I see.
Handling those more repetitive tasks so those human employees can focus on providing that personalized service.
Makes sense. Automate where you can, personalize where it matters.
Exactly. It's all about finding the right balance between technology and human interaction, which is a challenge for so many businesses these days.
For sure. But even with the best strategies in technology, sometimes those external factors can really throw a wrench in things.
Oh, absolutely. Those macroeconomic risks.
Right, like economic downturns or geopolitical instability, those could be really tough to navigate.
Yeah, those are always lurking in the background, and they can have a huge impact on any business, especially one operating globally. Haidilao acknowledges that things like recessions, political unrest, even natural disasters could negatively affect their business.
So how are they mitigating those risks? What's their plan for weathering those potential storms?
Well, they're diversifying their reach, for one, so they're not overly reliant on any one market, spreads the risk.
A smart move. Don't put all your eggs in one basket.
Exactly. They're also keeping a close eye on global economic trends, adjusting their strategies as needed. And of course, they're focused on maintaining that strong financial position, gives them a cushion to absorb those unexpected shocks.
It sounds like they're taking a proactive approach to risk management.
Oh, definitely. Always a good sign. But even with all that careful planning, the future is never certain.
True that. So what's your overall assessment of Haidilao moving forward? What are some of those key opportunities and challenges they'll be facing?
Well, they're in a dynamic and ever-evolving industry. Rising labor costs, supply chain disruptions, constantly changing consumer preferences. Those are all challenges they'll have to navigate.
Yeah, those are some serious headwinds.
They are, but on the flip side, they have a lot going for them. Their commitment to customer satisfaction and employee effort is a huge strength. And they're actively seeking those new investment opportunities to fuel that growth.
It sounds like a mixed bag, but overall, I think they're pretty well equipped to handle it.
Yeah, I agree. They're a company to watch, that's for sure. Their story really highlights the complexities and opportunities of operating a global business in today's world.
Absolutely. And speaking of today's world, what about their environmental footprint? How are they addressing sustainability concerns?
Oh, that's a great question. It's something more and more investors and consumers are interested in, and luckily, we have their 2023 Environmental, Social, and Governance Report, or ESG report for short. Gives us some good insights into those sustainability initiatives.
ESG, the trendy acronym of the moment. So, what does their report reveal? Are they just talking the talk, or are they actually walking the walk?
I'd say it's more than just talk. Their report highlights a genuine commitment to sustainable practices, across all aspects of their business.
Okay, so what kinds of actions are they taking? Give us the specifics.
Well, they've implemented all sorts of initiatives to reduce energy consumption, water usage, waste generation, all those key areas for any business that wants to lessen its environmental impact.
So they're hitting all the major points.
They are, and they're also working on minimizing their greenhouse gas emissions, which is super important with climate change and all.
Absolutely. Can you give us some specific examples of how they're doing that?
Sure. They're optimizing those food delivery routes to reduce fuel consumption and emissions. They're replacing those fuel-based hotpots with electric ones for their takeaway services, and they're even looking into energy-saving kitchen equipment. A lot of thought going into reducing that carbon footprint.
That's great to hear. It shows they're really taking this seriously. What about responsible sourcing? Making sure their ingredients are coming from those ethical and sustainable suppliers.
Absolutely. They understand that consumers care about where their food comes from, and they're committed to sourcing their ingredients responsibly.
That's good to hear. What about waste reduction? Especially with all those takeaway orders, are they doing anything to minimize all that packaging waste?
Yeah, they're making progress in that area too. For example, their restaurants in Australia have already switched from plastic bags to paper bags for takeaway. They're also working on reducing waste from things like disposable tableware and packaging, which is a big source of pollution.
Okay, so it sounds like they're on the right track. What about the future? What are their sustainability goals going forward?
They have a lot of plans. They want to increase their use of degradable materials, keep optimizing their logistics and supply chain to minimize their footprint. They're not just content with where they are now. They want to keep pushing forward.
It's great to see that long-term view of sustainability.
It is. And it's not just environmental sustainability either. Remember their commitment to social responsibility and employee well-being. It's clear they're building a business that's both profitable and responsible.
All right. We've covered so much ground today. We've explored Haidilao's business segments, their growth strategy, their impressive financial performance, their unique approach to employee well-being, and their commitment to sustainability. It's been quite a deep dive.
It really has. And if we take a step back and look at the bigger picture, Haidilao's story is a really interesting example of a company navigating those complexities of a global business. They're working hard to create value for everyone, whether customers, employees, shareholders, even the environment.
Absolutely. They're not just chasing profits, they're trying to build a truly sustainable and responsible business for the long term.
Exactly. And that's definitely something worth noting.
So as we wrap up this deep dive into the world of Haidilao, here's something for everyone listening to think about. Can a company truly be successful in the long run if they don't prioritize those things, the well-being of their employees and the sustainability of their operations?
That's a really great question, and hopefully this deep dive has given everyone some food for thought.
We hope so. Thanks for joining us on this flavorful journey.
Until next time.